Hey everyone, welcome to another episode of Trading Bitcoin with your host Tone Vesta. We are going to cover the markets, gold, and this is going to be a great episode. It's I never thought I'd say this. Like, I love Hong Kong. It's one of my favorite cities. I really wish they had slightly bigger apartments, but I really love Hong Kong. But I'm so happy that I am, in Zurich, because it was getting really hectic. It was like 10 days of I'm not even a big partier, but it was 10 days uh, of too much fun. And now it's back to business. So I did a video right before I got on the flight. I got off the flight. I got to my apartment here in Zurich. I glanced at the price and we were over 4,000. Time-wise, it was easy for me to shoot over a message to Tyler, who doesn't seem to sleep, and Venzen, who is a short-term trader, so he probably also doesn't sleep. So welcome, guys, and we can go ahead and talk about the markets, Bitcoin, S&P, and whatever else is on your mind.
Terrific. Hello, everybody. Great to see Venzen again, and you, Tone, catching up with you finally. Yeah, the markets are going crazy. I've sent out a bunch of tweets saying I've never seen anything quite like this in 40 years of watching asset classes and markets. What I mean by that is everything is right on the edge of either breaking up very big or breaking down very big. And it doesn't matter if we're talking about precious metals or the world stock markets or the dollar and currencies or Bitcoin. Now back at 39.95, it hit 4,000. As some of you know, I think it's going to have a lot of trouble getting over 4,000 to 4,200, but I can't wait to hear Venzen and Tone. So this is going to be a lot of fun today.
Hey, Venzen, how you doing, man?
Hey there, Tone. Doing well. I tell you what, we're having one of the hottest dry seasons in Thailand at the moment. It's just incredible. The amount of heat and no rain relief. Normally monsoons blow through and it kind of clears some dust and stuff, but it's just incredible. And for me, this is strange because it's coinciding with this period in the market where there's been a lot of frustration, especially in Bitcoin. Everything is going up, even some stupid altcoins, and Bitcoin is just in this frustrated sort of little patterns. And it seems that there is now a release of some energy, and it's going to be interesting for us to talk about it. I've got some interesting scenarios mapped out, and wow, what the US stock market is doing, this could be incredible. I'm leaning to the upside, but I think Tyler is going to temper that.
All right, great. Let's go straight to screen share. We're going to talk about the CBOE news as well. I don't know if we should cover that first, if we should cover that last. By the way, I just did another interview. It's over on my Twitter with I have a bunch of interviews coming up. Hopefully promote the conference a little bit more, understanding Bitcoin. Tyler, you will be there. Hey, Venzen, you don't mind if I mute you, right? And people have asked me if you live on the side of a highway, and I'm like, no, you guys haven't been to rural Thailand. The bikes can get pretty loud based on how fast they're going. So Tyler and Leah will be there along with lots of other really, really cool people. I will be meeting Christian Decker actually on Monday. We're both going to be speaking at a meetup here in Zurich, so that should be a lot of fun. So really looking forward to that, and it will be great. So please go ahead and check that out. Carnivory dinner is also open for registration. Over on tonevase.com. Oh wait, I hit the homepage. Over on tonevase.com. Really quick there. Just want to update you guys on my travel schedule. So if you go over the workshops, and it's Amsterdam's been added, Berlin, Rome. My traveling just doesn't stop. I will be, the Zurich is tomorrow. Then we have Cairo, Malta, and Philadelphia. So please check out Philadelphia. These are the workshops. And my calendar will be updated this weekend. a bunch of other conferences that I have committed to traveling to. So go ahead and check that out. And we will be adding new t-shirts over to the store. Okay, let's go to the news. Let's just cover CBOE because this is going to be really, really quick. Okay, so I'm sure Tyler is going to agree with me on this one because he was watching me back then. When the futures came out, if you guys go back to the videos of the futures launch, I'm going to try to keep this as briefly as I can. When I learned that the CBOE was front running CME and launching their Bitcoin futures last minute ahead of the CME, I was incredibly critical of the CBOE because I felt that the CBOE does not have an expertise in the futures market. CBOE has an expertise in the options market. So I had said a year and a half ago, the CBOE has no business launching Bitcoin futures. Not only do they not have business launching the futures, there's not enough liquidity for the need to have two different companies launching them. Now, I know what everyone's going to say, oh, you're against free market, you're against free market. No, I'm for efficiency and for expertise. And therefore, only the CME really should have had futures to begin with. So I am not surprised at all that the CBOE is removing the futures. Now, is this good or bad? This is actually good. The CBOE and the CME launched their futures contracts at the peak of the price of Bitcoin. So maybe we now need the CME to realize how silly it was for them to launch Bitcoin futures early and to also stop launching the Bitcoin futures maybe in about 6 or 9 months, and they can signal the bottom in the price of Bitcoin the way they signaled the top in the price of Bitcoin. That would be totally ironic, and once again, a complete and utter coincidence. The CME and the CBOE are not responsible for the bear market. The bear market was going to happen regardless. I will admit, however, that the hype of Bitcoiners thinking that the CBOE and the CME futures are somehow relevant to the price of Bitcoin, this hype of the misunderstanding of what these futures are did significantly help drive the price of Bitcoin higher. But so it's all about the hype. There's no price manipulation. There's no conspiracy theories. It was all hype that drove it up. And once these things launched and they were not very relevant, the hype kind of ended, and there was nobody left to buy at those exuberant high prices. That's pretty much all it is. So I wouldn't be surprised if this helps to signal the bottom of the market the way it kind of signaled in hindsight the top of the market. That's my general view on this. I also think that it's better this way by only having the CME futures because there's really not enough liquidity to have both of these things in action. Let's get Tyler's take on this and comment on anything I've said or anything you want to
add. Yeah, I would agree completely in terms of the timing of this thing. It showed back on December the 10th of 2017 when the CBOE jumped in front of the CME, which didn't come out for another week after that, both of which occurred right before the ultimate peak in the market. It's not so much that they were bad timers, but it shows what the exuberance was at the time in November and December, taking the prices much higher than they needed to go. And I definitely agree that part of that hype had to do with the uninitiated in financial markets thinking that because the CBOE and the CME were getting involved, that meant large financial institutions were putting their stamp of approval on Bitcoin and cryptocurrencies, which couldn't be further from the truth. The CBOE and the CME were doing it because of the activity. They would trade anything. They would trade clouds if people were interested in buying and selling clouds or clowns or clods or anything else. It just happened to be that the hottest thing at the time was cryptocurrency. Secondly, I would agree that the CBOE had no reason to be in this space. They are very aggressive and they're trying to grab market share any way they can. But this is a tricky space, and the CME has got it locked up. The CME obviously is made up of all the original large exchanges in the futures market that they've gobbled up over the years, and they're the best in the world at what they do in the futures market. Having said that, it's been very disappointing for both the CBOE and the CME in terms of any kind of use of their product. Volume has stayed very low on the CME, the CBOE, and hasn't been stellar on the CME. But the other thing I would say is the CBOE is the group that has been trying to bring these ETFs out with the SEC, and every single one of them has been shot down. So if you're sitting on the board of directors or of the CBOE, you've just had your head handed to you over and over and over again with this whole crypto thing. So I'm not at all shocked that they're ending what they're doing in the futures market as of March of 2019. That doesn't mean that they won't come back or try to do something else, but this was the perfect story. I would disagree a little bit with Tone in terms of this potentially signaling some kind of a bottom. I think we've got a long ways to go to get to a bottom in terms of time, and I think both Venzen and Tone agree with that. We all disagree a little bit of what the ultimate low price is going to be. But the fact that all these other cryptocurrencies are popping so strongly, to me, indicates that the great majority of people still believe that prices are going up, not down, all across the crypto spectrum. And because of that, we aren't anywhere near a bottom yet.
Let me just jump back in there real quick, and I will just say that what the CBOE should be doing and should have been doing for the last 2 years is trying to figure out how they can bring options on Bitcoin into the space. And they should be using the CME futures potentially as the underlying element, because there aren't really better options to settle those options against an underlying price. Now, what the CME should have been doing is let the CBOE do the stupidity of launching those futures and failing. And what the CME should have done is create their own index, a real index of price, without relying on a bunch of exchanges that they then realized they didn't have any control over. So both of these, high quality financial institutions royally screwed up.
Yeah.
Oh, and if the CME decided to launch futures ahead of the CBOE, I will be critical of the CME for doing that stupidity.
Yeah, I would agree. When everybody gets excited about something, and I just think about the 5,000 projects in the crypto space, being able to tell what is good and what is not good is very confusing, not only to people in this space, but certainly everybody outside of the space. Now you can think of what the big banks and the big institutions and hedge funds are thinking about, oh my gosh, now the CBOE, who's been our friend for years and we use it, is dropping out of this race. I don't think this crypto space is ready for prime time.
Yeah. Oh, I might have misspoken on my last statement. I meant if the CME launches options instead of
right.
I would be so critical of the CME, you wouldn't believe. All right, Venzen, any thoughts on this, or should we move on to the price of Bitcoin? I don't know, like, if you even care about the futures and options markets of the traditional markets.
You know what, Tone? I care a lot because for almost a year and 3 months, I had my pinned post on Twitter was about the CME futures, and it was called "Understanding the CME Futures" because most people didn't. The point you made right at the beginning. It's as if the market is so desperate for adoption that when a company like the CME says we're going to do Bitcoin futures, the cryptoverse explodes in ecstasy, thinking that this means mass adoption. And there are various points about that. The CME is not a cash, well, it is a cash settled futures contract. So there's no impact on Bitcoin's trading price, right? That's the first thing. The other thing is, you made a very good point about the fact that the CBOE is not qualified. They've got no track record or precedent of running successful futures. It's just not something they did. So they were also bandwagoning with that. And I'm sort of with Tyler on the side that all of this confusion is an indication that we're not near the bottom. And then I need to disagree with Tyler a little bit. And I speak under correction, Tyler, because you're familiar with US markets, whereas I'm familiar with its performance during the last 10 years. You've got a deeper insight. But my view is, and Tony, funny enough, you're agreeing with it. There is a classic Elliott wave sort of contrarian dynamic happening, because the moment that the CME and the CBOE came online with their Bitcoin futures, the price crashed. And that is uncanny timing. And a lot of people said, oh, it was because there was a lot of shorting. Well, there wasn't sufficient shorting on the CME or the CBOE to cause price to move. Never mind the fact that the CME has got no impact on Bitcoin price whatsoever. So that is a classic signal whereby, you know, we tend to think that the large institutions, the large market makers, the large exchanges have all of this insight into the market, somehow more insight than the average Joe trading. And that proves that they don't. So this is my disagreement with Tyler. I think it was a critical timing error, not because they chose the wrong moment. It's just that they happened to appear on the scene at exactly the wrong moment. It was their bad luck, and it was sort of a destiny that would happen. And I agree that it's gonna, their withdrawal from the market, the CME's withdrawal, will indicate a temporary low. It'll indicate a temporary bottom.
All right, so let's go into the price. I just realized I was on useless screen share the whole time, but let's get back into the price. Oh man, like this was my projection, and it was just like little thing that I did. I haven't had time to review it or update it. The last time I actually looked at this chart, Venzen, you were playing around with it. This shows you how much free time I have to analyze this stuff. And everyone really liked your time zones. We will do another video. Let me think about this some more. Let me play around with this some more, and we will come back to it. Let's talk a little bit more about intermediate term and short term. I did a video this morning. I know Tyler saw it, Venzen, you saw parts of it. And to me, the weekly chart remains bullish. It has been bullish for a while, other than this weird drop from 4,200. But my view is the same. Once you go up to 4,200 the second time, the probability is greater than 50% that we will surpass 4,200. And that continues to lead me to my $5,000 target. Now, I had started to walk away from that $5,000 target before the drop below 3,000, but the weekly chart remains strong. My weekly chart remains bullish here. We're on a 6 of 9 and looking nicely. Ideally, I would want to see a spike into 5,000, not next week, but the week after that, or the week after that. Let me just go through some of these charts. The daily chart is on a green 2 above a green 1, signaling a buying opportunity as we're breaking the 128-day moving average. Now, closing above that moving average is going to be nice because the 200-day moving average is all the way at 4,800, which is a reasonable target. But of course, we'd have to cross 4,250, which is a serious resistance zone, along with 4,200 itself, the zone that Tyler doesn't think we're going to break. And I'm about to get his views on that now. Actually, let's talk about that. Let's talk about 4,200. So Tyler, this to me on a daily chart, you know what? I'm going to get rid of these boxes. They're getting annoying. They were indications of volume spikes, and I think people have seen them enough. And go back to the old videos when I put them up. Let's get rid of them because they're just cluttering my chart. I'm also going to get rid of these arrows here. I mean, they've been there long enough. Let me just clean this up. This blue line is no longer necessary. This red line, I don't even remember what they were there for because it's been so long. Let's clean this chart up a little bit. Let's go to full screen. This is the daily chart. It looks fairly boring after the big drop. This looks like a pretty decent, maybe not. It's like this weird head and shoulders thing. I mean, obviously an inverse head and shoulders, but a head and shoulders nonetheless. People love this weird Adam and Eve pattern that I've never heard of until like recently, that I never really cared about, nor do I still do. What I do care about is coming back to 4,200 for what would potentially be the 4th time. And at that point, I would have like an 80% confidence level that we're going to break 4,200 to the upside and go to about 5K. Your latest thoughts on 4,200, Tyler?
Well, I still think that the zone between 4,000 and 4,200 or 4,250, or that red line, the setup trend line that comes in just below 4,300. I think all of those are very impressive overhead resistance for price. Now, it's true that we found trouble getting above that on 3 different occasions, but each of those 3 different occasions tried at least once or twice, and in the first case, 3 times to get back up over that 4,200. And the most recent, we had 2 days in a row. And the second one was this tremendous reversal candle out of nowhere because we were on a green 7 and it looked like, oh boy, here we go to the upside. We got at least 2 more days to go. And then all of a sudden the bottom drops out. All of that to me, it isn't definitive. It's not saying there's no way we can get above 4,200, but it's saying that there are some very big sellers sitting there right in this zone. I am impressed with the fact that last night we were able to take out the 128-day moving average, but we're all of a sudden, you know, not following through. Now it's too early to draw that conclusion, but we've given up half the gain already on that pop. And if this reverses to the downside right at this 128, I think it could start a pretty big drop. I'm not saying that's going to happen. We do have a green 2 above a green 1, but there is a lot of resistance slightly above where we are, a couple $100, maybe up to $300 up to that dotted orange or red line. If we go above that, it's going to be difficult to get to 5,000 because now the longer term moving averages on the longer basis are below 5,000. We're quickly getting down to the 4,800 level. Now, if it takes us 3 weeks, then I think it'll be very difficult to get above even 45 or 4,600, maybe on a wick or a big spike up. So
well, yeah, exactly that's what I was referring to, right? Because once you go up one time frame to the weekly chart, we only need a wick at 5,000 to 5,100 as long as the close is under that 30-period moving average.
Yeah, and I agree completely with that. And I am not vehemently saying that we are not going to get up to the 5,000 level. As some people know, I'm vehemently saying we will not see 6,500 before we see 1,500. And we've got a bet on the table. I picked that number because I am nervous from a bear's point of view that it's been so long below this 4,200 that if we do pop above it, we're going to take a pretty good run. Just eyeballing this pattern on a daily basis, the bottom's around 3,300, the top's around 4,300. That puts you at 5,300 if we break that neckline, either on a cup and a handle or on an inverse head and shoulders. So I completely agree that if we can get above this 4,200, 4,300 area, we'll probably see some big run up close to 5,000. And then that should be the end of it in terms of an intermediate term move before we begin to Fu Manchu comes and pulls the lever again.
Venzen, your thoughts on the $4,000 to $4,200 area? How likely do you think we will break it? And if we break it, what are your up targets and why?
All right, Tone, can you please zoom out just a little bit so we get some November price action? Yeah, like that. So exactly as Tyler described it, we've got that, what do you call your horizontal red dots there? It's a trend line, right?
Yeah, that's the setup trend line off of the sequential. Yeah,
that's right. Okay, so at exactly that level, which I assume is around 4,250, it looks like.
correct.
We've got support in November coming down, and then in late November we tested to the upside. Okay, the setup trend line does not extend as far left, but we can see there's horizontal support turned resistance, and then we've been testing it. So what I see here is a classic Elliott wave triangle. Two rules of Elliott wave come into play. The first one is that we had a barrier triangle from June last year until November when price broke down. In the left of the chart, not visible and no need to go there. There was a triangle and you called it perfectly, right? And it broke to the downside. This pattern right now is also a triangle. Why I interpret it as a triangle is because the reversal from the bottom in mid-December goes up in 3 clean candles. And then you get a confusion, a mess of confusion into mid-February, right? That is a correction, visibly a correction of that move upwards. Then you've got 5 waves since mid-December, and not mid-December, from mid-February until the beginning of March, you've got 5 clean waves upwards, right? You're cutting the 5 waves. I wouldn't start it from the bottom on the left, Tone. Thanks for drawing it. I would start it from mid-February. I know that doesn't make sense, but if you humor me for 2 minutes, if you draw that triangle not from the December low, but from the February low, in other words, it's bottom left, yeah. And there is the triangle. Exactly.
Yeah,
so if you can start it on the top left-hand corner in late December, top left-hand corner in late December. Then we've got an A wave to late December high where your cursor is. Then the B wave coming down to mid-February where your cursor is. Then an advance into back to the top at 4,200. Then 3 waves down back to that ascending sort of bottom barrier. And so we've got 5 touch points, right? Late December is an A, B, C, D.
You're on your own on this one. I just tried drawing a triangle. No matter which way I draw it, it does not fit my personal rules of drawing a triangle. I'm not an
Okay.
Elliott guy, so you can try and describe it. You can try and do your own screen share, but
I'll just, no problem. I'll just carry on where we left off. I'll just say that from the December low, we've got an advance.
I'm incapable of drawing what you're thinking, is what I'm saying.
Okay, no problem. And then it becomes confusion. So best I describe it. We've got an A wave from the, we've got an advancing wave from late December. The 3 green candles show that. And then in mid-February, we've got an advancing wave again. And we're looking at a pattern that is consolidating to your trend line at those red dots. And I think the next time that we meet it, there's a chance that we reverse and make a smaller downward correction. But there is also a very good chance that this 5th kind of approach and grappling with this horizontal level at 4,200 is going to see a break to the upside. Right. Cool. So that's my sense that there is a triangle unfolding. And in Elliott wave, you've got a rule that you cannot have 2 exact similar patterns. In other words, 2 triangles in the same direction. In other words, this triangle is not going to resolve to the downside, but it will resolve to the upside, because its barrier now, instead of like the previous one that was at 6,000, this one's barrier is at 4,200. So it wants to reverse to the upside. That's my analysis here.
Gotcha. So you are leaning bullish here going into the summer.
Not only a little bit, but very bullish. I think that there is going to be an explosion of irrationality, not only in this market, but in all markets. And that we will go beyond 6,000, not in a straight line, but in the course of the next year and a half.
And when you say all markets, you mean within the crypto space or branching even outside of crypto space?
Ooh, I don't know about all of crypto, because the alts showed us some bullish fervor when everyone was buying Litecoin and Tron and everything to the upside. And now the value seems to be flowing back into Bitcoin as people close those trades for Bitcoin payout. So I think Bitcoin is about to embark on a run, not a bull market run, but a bear market rally to the upside. And I also think that the stock markets are going to perform beyond anybody's expectation to the upside.
Okay, cool. Let's jump onto a slightly lower level time frame. So when I did my video from the airport, I mean, I was gonna say I noticed this candle, but it was like it's stuff like anyone would notice this candle. But I didn't know it happened in real time. I had absolutely no clue. I had to zoom in into the sub-hourly charts, but I'm not an active trader, so I don't watch this stuff all day long. But you do, Venzen. So I'm gonna shoot this back to you one more time. How did you and the traders in your chat group, how did you manage this? Because I zoomed into the lower level time frame, and if I was a short-term trader, we're talking 10-minute candles and lower, like 10, 5, 3, 1-minute candles. If I was trading that time frame, there's no way I would have made money on this, because none of my metrics would have gotten me a profitable trade here. I probably would have been at best break even or lost some money. And if I had obviously a short-term trade on going into this candle, that trade got annihilated with a stop loss. How did you deal with this? Because I'm pretty sure were you in a trade when this happened, or did you trade it, is my real question.
Tone, I did not trade that, and nobody from my group traded it. And Tyler will understand. I don't know if you've looked at the moving averages behavior, Tyler, in this sort of 1 hour or 15-minute or 5-minute charts in Bitcoin. At this point, exactly. At this point, Bitcoin's moving averages were in disarray. They were making buy signals and sell signals several times a day in the 1 hour chart, 15-minute chart. So this was, to us and to my mind, was another fake out. And we actually had an agreement, a condition in place that we would only
Well, that was a very useful thing he was about to say.
Somebody cut him off.
Always happens that way. All right, Tyler. I mean, you definitely don't care about 1 hour charts because I barely care about 1 hour charts. So general thoughts. I mean, you saw my video. I mean, I don't know what else to say about this candle.
Well, I don't either, but you did post something to a bunch of people on Telegram about a study that was just written on Medium. And as people are tired of hearing me say, I don't trust any of the exchanges that any of the cryptos are traded on. Now, this is one of the better ones. And there are a half a dozen that are a lot better than the other 50 or 75 or 200 or whatever it said in that article. But the point is that what they were doing is they were going back and calculating how much of the real volume and the trade action is valid and how much of it is fraudulent. And the numbers are just staggering that they've got bots that are doing wash sales at hundreds of a millisecond where you just can't get good fills. They're painting the tape, making it look like there's a lot more trades and a lot more volume taking place on their exchanges, and it's just not true at all. What that candle to me looks like is a couple of computers going at it, and they're glitching, trying to outmaneuver the other one in a very short time period, running the price way up, running the price way down, and net effect was that the price didn't move at all.
All right, I think we have Venzen back. Hey, Venzen, you were about to say something really, really cool. You just got cut off. You said you had some kind of a agreement in place on trading this. So give it a shot one more time. Though unmute first.
I think he's muted. Yeah.
guys, I was disconnected there for 2 minutes. Can you just run by me what you're discussing?
No, you were talking about not trading this candle and that you had some kind of a verbal agreement with your group on something, and then you got cut off from saying what it was.
Oh, I was cut off for that long, right? Okay, I'll put it in a nutshell. If you just zoom out of this 1 hour chart, like a few candles to the left, there is there's a sort of a closing high established up there, and we said we'll trade when price moves above the closing highs in the middle of your chart. So when this move happened, because there'd been so much confusion in the 15-minute MAs, where we are watching for a trend to develop, that we didn't take the trade. Did I explain that I was going to lose if I traded this? If I was scalping the 5-minute chart, I would have lost for sure. I would have lost 5% of my account.
Wow.
Yeah, that's a sort of an entry, but because there'd been MA confusion and false signals for days, we just said, well, wait until we get above the close in the left of the chart, and that is the entry we took. So I want to bounce it back to you guys, because what I was saying when I realized that I've been cut off is that that Darth Maul candle, that price behavior, we've seen it lots of times in the chart, and it actually angered me. I posted to my group and I said, that is so unfair, you know, that is so unfair, because they're liquidating to the upside, then they're liquidating to the downside. That's one explanation. The other one is that the market is self-harming. They faking up to the upside, and then they go to the downside. The bears lose, and the bulls take it on from there. Those are the two explanations I got. What do you think?
Well, while you were off for just a second, I made the comment that Tone has posted a Medium article about some researchers that have gone through the 10 or 15 or 20 exchanges, analyzing how many of the trades are valid, how many are fraudulent, how many are wash trades, how many are painting the tape. And the conclusion is just overwhelming that if you're playing these games, you've got to be ready for the exchanges to rip you off in both directions anytime they want. That's what you get with unregulated exchanges. And that candle there tells me that's exactly what was going on, that they know where the orders are. They know where the orders are coming from. They know how big they are. And anytime they want, they can run the price in any direction they want and take as much money as they can from them. That's why I would never trade any of these.
And in the process, they ruin their own playground by playing unfair. You know, it's like bullying the market and the retail sector.
Absolutely.
Yeah, it's unfair,
but
I wish they could be punished.
If you can bank the money, take the money and run like all of the ICOs, they don't care if they're fouling the water for everybody else. And then they just move on to their next project, their next exchange, their next ICO.
Yeah, in line with what you're saying, Tyler, I noticed today sitting with one of my clients that this did not happen in OKCoin, for instance, which is a sort of a side little spot exchange. There was no fake out to the downside. They did the fake out to the upside, but to the downside there was just nothing. Price returned to where it came from, and nobody sold. You know, I think BitMEX and crew, they take it as far as they can when they do their thing with impunity, with complete impunity.
Yeah, guys, honestly, I saw someone sent me this article. I already forgot who sent it to me. I did not read it. I do not have the time, but it seemed interesting. I posted it to one of my groups just to gauge it, and the feedback came back positive, which is why I'm pulling it up here. This is not encouragement to send me more articles. I'm telling you guys right now, I will not read them because I don't have the time, which is hard for people to comprehend, but that's the way my current life is. I haven't even read Ugly Old Goat's recent articles, which I hear were pretty good. And I'm like 3 episodes behind on Hyperwave. So I have a million things to catch up on. But go ahead and check this out. It's called Fake Volume in Cryptocurrency Markets, the February report. Thank you to whoever sent it to me. And all right, so that's the short-term look. Anything else you guys want to say about Bitcoin? I don't really have much else to add. I'm hoping, like, GBTC didn't seem to go up all that much. The premium doesn't seem to be up all that high. Like, nothing special is going on with GBTC. And but I do want to talk a little bit about gold and the stock market. I would like to keep this video to like under an hour, and then maybe we can get some questions. I believe Leah's watching. Shout out, Leah. And maybe she can text over some questions that we've seen in the live chat. I know people have been asking me to take a look at Nifty again and Tesla, and maybe I'll do that. Final comments on Bitcoin before we move on to gold and stocks.
I'm okay. I think we've discussed the current chart, and there is Tyler. Would you say what I'm seeing in the 1 day and the 4 hour and 1 hour charts is that there is an upward trend? Do you ever look in terms of moving averages? Do you see that as well, or what is your view here? You're just thinking that 4,200 is going to be a bit tough, right?
Yeah, I just think that it'll be a little tough, but you're absolutely right. On the shorter time frames, we're beginning to build a little momentum to the upside. But every time we've seen that, you can just see the big red bars going back across that. As you get up close to that 41, 4200, very heavy selling comes in and drives it right back down again. I would expect to see a similar thing. Tone thinks that we've got a really good chance of breaking to the upside above the setup trend line. And I do not disagree with that, particularly since we're ahead of got above the 128. I'll be very interested to see how this current candle closes though.
All right.
Right.
We actually are going to get back to Bitcoin. There's a possibility Willy Woo is going to join us in a minute. So while I wait for him, gold hasn't done anything this week, and that's weird because the S&P did a lot in the last couple of weeks. And here are the last 2 weeks of the S&P, a giant drop followed by a giant rise, while gold didn't do anything, relatively speaking. So once again, I find gold weird. I recommend not to trade gold. And it looks like gold has been untradeable on a long-term basis for years, and it's still trying to figure out a direction. I remain bearish leaning on gold. Can't wait for it to go down to the $800 area so I can lean bullish on it for the following decade. Tyler, quick thoughts?
I agree completely. We were in it long when we broke above that long-term downtrend line. We got out of it on the big one down, the red one down, simply because of the reversal candle on the green 3. I don't usually trade that short term, particularly with investment accounts. What I was hoping for is we'd pull back down to that trend line, that long trend line that goes way, way back, and then find some kind of support to move up. So far, that's what we're seeing, but I want to see it from the outside, not from the inside. If we break down below that long-term trend line, we're going down big and heavy. We'll take out those moving averages and we'll be below 1100 fairly quickly. If we're able to hold here, and it's very interesting how the movement of gold and the movement of the stock market have been fairly close. And I am very bullish the stock market, even though I haven't put my other 50% in. I could do it this week. I want to see where all the red nines go. We'll talk about that in a minute. But I could see gold holding in this area and moving up along with the stock market. So I am not telling people at this point to short the gold market, but I don't want to be in it.
All right, gotcha. Hey, Willy Woo, thank you for joining us. How you been, man? Let's check your audio here.
Hey, Willy.
Just click on the arrow next to the microphone, select your mic.
Hey, Wooster.
Guys hear me okay?
All right, so
Hey,
while
easy.
Woo is
How you
in
going?
his audio, let's get
Can
back
you hear me?
over.
Yo, yo.
Oh, hey, we got you.
No?
Hey, man.
You got me? Okay. Is that coming through
Yeah,
clear? I'm missing
got
good things.
So let's
Great.
get you back.
Hey, guys.
How you been? I don't know. Do you want to disclose where you are in the world?
Yeah, I'm in Austin, Texas. Just arrived. Oh, wait, hold on. I know what's happening. Whoa, that's better. Can you guys hear me okay? I just heard feedback coming through the YouTube channel.
Yeah, you sound good.
Yeah, you're better now.
Oh, great. All right, yeah. Yeah, I'm in Austin, Texas. Here for the South by Southwest conference.
Oh, yeah,
Jimmy Song was here as well. I think it is.
Wait, who else is there?
Jimmy Song. He was doing
Oh,
the
yeah,
battling
Oh,
with
dude.
the Hyperledger IBM guy. And yeah, it's a nice conference here. Looking up in the audience, it's such a tiny audience. Completely different from a couple of years ago, even last year, and the kind of audiences we were seeing. So I was just joking how the bottom's probably in because there's nobody interested in in blockchain this year. So it was interesting. Yeah. How are you
Dude,
guys
you
going?
should have been out in Hong Kong. So Ethereum had like an event like after the conference, right? So the conference took all day, and then at like 6:30 at night, Vitalik spoke, and then all of the Ethereum meetups from around the world spoke, like the representative from each meetup from all around the world. So there were like 3 times more people at that event than at the actual conference all day long. But there was a crazy amount of people over at the Hong Kong event. Hey, so the one interesting thing that I've seen from South by Southwest, and we're going to talk about it on the law review, Jay Clayton was there of the SEC, and he said something about stable coins potentially breaking security laws, which I'm going to find very, very interesting to discuss with the lawyers.
Well, that's big news.
Yeah.
I don't know the ins and outs of that, but that's big news.
Yes, that's going to be interesting for the law show. Hey, so on Bitcoin, real quick, can I get your comments on the short-term stuff, this Darth Maul candle that took place in a single hour? I mean, the range of this candle was like $200. I mean, it's nothing new. We've seen $200, we've seen $500 range candles in a single day, but this one in particular took place to the upside and then to the downside so quick. And well, I did pull up an article talking about, you know, how exchanges are, you know, basically scamming versus their users. And your thoughts on this short-term volatility on hourly charts, 10-minute charts, 20-minute charts, and then we'll get your NVT bigger picture look.
Yeah, I agree. I mean, if you look back on the chart, those more candles are everywhere. Yeah, and look, since second half of 2017, you can just see it on the charts. The charts are changing. We're seeing a lot of these bats, these kind of wicks. They see these wicks both sides, like that mole candle. And if anyone's been trading, particularly Bitcoin, it's really dangerous to put stops, particularly type stops, if you're not watching it all the time. It's just rife. One of the strategies these guys are doing is they're stop farming. So, you know, they let the buy walls go, they force the price one way, they push it past the stops, and then they take out either the shorts, the longs, and it's a way of gaming it for profit. You know, like I say, it's like trading's it's a game, you know, it's a strategic game. We're not just making bets on where the price is going, but there's players on the gridiron field pushing that thing around most strategically to milk the most money from the retail traders. And I don't see that as anything new. But yeah, like, what I do keep an eye on is the manipulation. It is ramping up. It's been ramping up since the 2017 phase, and probably the news for me this month is just considering that they may be manipulating the on-chain volume as well. Yeah, going through to that site, there's, you know, a lot of the on-chain stuff we're looking at. I think I showed in a prior episode, I haven't published a lot of this work. It's kind of debuted on your show first, if you catch it. The kind of accumulation we're seeing in the market right now is quite huge. Even the structure of every bear market has been very different, even though a lot of people are comparing 2017 to 2018 to 2014 on the price pattern. If you look on chain, a lot of changes, and there's a lot of hidden accumulation.
Hey, where should we look? Willie, give me something to click on here.
What should we look at? Let's just go to price models, Bitcoin price models. I can't really show you this stuff because the chats aren't live with latest research, but you know, I did show on-chain profiling a while back, and it showed how much was being whatever. I was a whole bunch of money was bought at much higher prices than before it. And so as we've come down off the 20,000, 6,000 was a lot of volume support on chain. A lot of people bought at that 6,000 range, and that held us up. And we're now in the 3,000 range. And guess what? You know, there's been even double the amount that was bought in the 3,000 range on our way up. And historically, if it goes to history, we've probably got double the volume that we need to trade within this 3,000 band before 3,000 is ready to go. And it's taken us 4 to 5 months to get to here. If that gives us about 4 to 5 months of time in the 3,000s, then I would say that's enough time for the volume on chain. When I say volume on chain, think of new people investing, hodlers scooping up and locking it up and buying for the next cycle. So we're waiting for those figures to get. So maybe jump into down below a bit, jump into momentum, Bitcoin momentum. Sorry, down a little bit lower under investment charts. There you go. Network momentum there, just under MVRV on the left, a little bit left, a little bit lower. Lower. It's like 5th, 6th one down. Momentum.
Oh, network momentum?
Yeah, yep. And Philip Swift put this view up first on Twitter, Positive Crypto. And you can see, like, we've seen this chart before, right? You can see the amount of investment volume. So this is the amount of Bitcoins, the sheer amount of Bitcoins being moved on chain over a long time span. You can see that the investment volume needs to ramp up to certain levels before we end this sort of downtrend and we set up for the next bull. And you can see that we're at this level right now on the right there. The level is currently looking, we're still in the bear market, and we need that to ramp up before we end the bear and we start the bull. And what I am thinking is maybe the on-chain volume may be being gamed. Since 2017, second half, we've seen a lot of manipulation on the exchanges. But furthermore, I'm seeing a divergence on-chain volume, which is estimated by blockchain.info. or .com, I guess they're called now, and also Nick Carter's estimates at Coinmetric. Now, Nick Carter's the first to publish his on-chain metrics. It's very open. It's done on like a 4-hour filter, or if anything's hopping with less than 4 hours, then it's not counted. If it's circular, it's not counted. There's heuristics there that you're filtering out to get to an estimate on what the real volume is. Now, because that's open, if I was, say, a very large player like even a Goldman Sachs or something, and you wanted to accumulate vast sums of the coin to then be able to have the control over that market, then I would be employing my quants to be manipulating on the exchanges and on chain. And the thing is, what we're seeing right now is that there's so many of these on-chain metrics that are showing that the bottom looks like it may be in, but anything based on volume is disagreeing. It's bearish. And what I've done is I've started to do a different type of on-chain volume estimate that is not yet public, and so it can't be gamed, right? And the deviation started tail half of 2017, same time when the exchange volume started to deviate. So I'm a little bit conspiracist right now, but at least it's based on some data that there's something going on with on-chain volume that's not legit, perhaps, and the outcome means that we think everything's more bearish than it is. The other thing is that I've just recently done on-chain on-balance volume. So real volume moving between investors as the price goes up and down, as you all know as traders, that OBV picks up hidden accumulation or divestment that isn't being shown on the price chart. And the structure of this bear market is completely different from the last one. Every bear market we've only had 2 prior ones, where price goes down, OBV goes down. Price goes down, people are divesting. But this one we've had is interesting, is OBV is flat, is price retraced 85%. So I'm like, whoa, this one is about accumulation. Even the price is retracing. The market dynamics, like we saw from 6,000 to 3,000, that was a huge manipulation of the market in my terms. That there was a lot of buy wall shaping that kept that 6,000 level to the point where people thought that was ready to pop and the accumulation was in, and then they let it go. And we overcorrected, and when we went down into the 3,000, low 3,000, there was immense volume. You can even see it on that chart right in front of us. Look at that spike, huge amounts of accumulation as this thing overcorrected. And so I was looking at this, and it's like, we're in a controlled market most likely. There's a lot of accumulation happening, and I'm very wary of this market right now. If we go to maybe the price models again.
We'll go backwards.
Yeah, the second from the top. Yeah, you can go back as well. The second. I think the one to watch right now, if you scroll, yep, great. If you see the orange line, we can make that clearer, but you can click the legend. Oh, well, that down below and turn off the MVT curves. You can just click them, and that'll turn those traces off. You can turn a bunch of them off, so we can zoom in on just the orange line. Now, the orange line is realized value, based on realized capitalization.
Right, that's the one that Nick Carter popularized.
Yeah. Coin Metrics was the first to create that based on some. Yeah, now just to say what it is. This is the average price that the entire market bought their Bitcoins for at any given time. And you can see back in 2015 that this acted very strongly as a support zone when we're in the accumulation bottom. You see the 2 touches before the 3rd touch, it broke through.
Sorry, Willy, you meant resistance zone.
Yep, that's the resistance there, and it touched again in the later half of 2015. Right. We
close to it already once.
Yeah, we got close, but it's not quite there yet. That's the thing I'm watching. I think I heard Tyler talk about this 2,300 band that needs to be broken. It just so happens this is also realized value resistance, which was shown in the 2015 cycle to be a very strong resistance band. Now, if that breaks through, all bets are off for me. That completely changes everything compared. Like, we've been doing a lot of the cycling back to the 2014-15 cycle, thinking, history's repeating, even though I'm seeing the underlying structure on chain as being completely different. Now, if we break through this, and with the amount of accumulation I'm seeing on this down phase from the 85% retrace, I don't know if, as a trader, you'd think, okay, we go to 6,000, we hit that, we come back down. But to me, if we break through that and we go up and test the 6,000, we're going to come back down and likely test this realized value, which previous resistance becomes support. And that's going to create a relatively choppy over the long term chart, but completely different. It's like we're now in the up market and accumulation finished, and it'll be a little bit more like the shape of the chart you saw in 2011. If you drag your cursor on 2014 and move it, hit the zoom out button on the top right, the minus. Yeah, there you go. Oh, it doesn't quite do it. Okay, drag the y-axis. You know how to do it. Drag it so you get curve down. Yeah, you can see it there. 2011. You can see that was the accumulation bottom. It almost, you could say it was a capitulation. But can you put your cursor on the 2011 zone there? And see, sorry, mid 20, tail 2011 before 2012.
Oh, get out of here. Hold on. Oh, wait, I just screwed up. Give me 1 second.
Yeah.
I can go home. And now I can zoom out. I'm gonna zoom out
Zoom
twice.
out. Yeah, there you go. Use a drag. You can drag it like a window to zoom into that
Yeah,
zone.
yeah, yeah, I got it.
Okay, so you can go. Yeah, drag it. You got
Hold on. I got you, Willie. I got you. There you go.
All right, so hover over 2012 and back up a few months.
Right. So
And
we're
then you go-
talking
So
about
the end of the first bear market in Bitcoin, where
right here.
we hit just below $100, and we can retrace down to, what was it, $5-6 on the.
Let's just do
there you
this.
go. That was the accumulation in 2011. You know, everyone's looking at history repeats. Look at 2014, but look at that where we accumulated. We accumulated way below, double touch there, and then we shot past realized cap resistance, and then we sat on that, and it drove the next bull market. And so there is precedence of that type of behavior. And if we break realized cap resistance now, for me, it's all bets off, you know. Like I saw a lot of accumulation on chain, a lot of guys, I think institutional hidden players scooping up coins like we've never seen before, ever in the 10-year history of these markets. And that's a lot of coin to scoop up. And maybe that's enough to put the accumulation to an end. So my thinking right now, a lot of things have changed for me. I am 66% at a guess that the bottom's in, 33% there's 3,000 breaks. I am not so confident of being bearish anymore. And that's just on-chain work, not looking at the technicals. But even if I looked at the technicals, we are actually on the lower end of the extreme on the long-term charts. If you were to price how far out from the, like if you plotted price on a log chart like we normally do, and you do log price on the time, log on the time, so the time is being compressed, it creates a very much a straight line. And it wiggles up and down around that straight line, and we're at almost at the ends historically of how far out of the standard deviations, standard band of motion, and that's just price across time without looking at on-chain movements. And so historically we're very close to where we can get on the low end. And so this kind of goes back to a few months ago or a few weeks ago while I was in Hong Kong. We had a show, and I think you posted the NASDAQ as one hyperwave that didn't complete. And we talked about the buying the NASDAQ in the 90s was buying into the adoption of the internet. And, you know, guess what? Bitcoin has the same adoption S-curve. So we have this fundamental exponential incoming capital as adoption increases. And on top of that, I see that we've got a market dynamic, which is these ripples in the bull bear market. And if you take, it's like a wave on top of a wave, the S curve wave, and then we ripple on top. The second ripple is what we tend to think of as a market. And we kind of lose sight that there's a base curve that is growing as we go from nobody to 1%. Best estimates right now is around 1%, maybe 3% of the world population owning Bitcoin. That's increasing at a rate of a doubling over the long term. There's a doubling every 12 months. So, you know, if everything follows like most adoption curves, we're takes about, maybe we'll taken 10 years to get to 1%. The next 10 years will take us beyond 50% of the world population. And so whenever we look at these markets and go, it's going up, it's going down, don't forget that there's this base curve of 1% of the world being in it to 50% or more of the world being in it over the next decade. And that skews all of these price charts.
Hey, Will. How are you doing, Will? I
Hey,
love it
V.
when you, hey, my buddy. So when you talk, I really love it because you sketch a narrative going over time. You're talking about the price. You're talking about the on-chain volume. And I must back up what you say. You know, this comparing this bear market to 2014 is a bad idea, because as we see in the chart right there, from the left to the right, you can count 5 distinct waves. And to not spin the same record every time, I will just mention for the last time, that is the completion of an Elliott wave sequence, not of some theory or some kind of a mystical, revelation. Any market, even if you look in the very first wave during 2011, you can count 5 waves up to that market peak when it corrected. Then you can count 5 waves up to 2013's May, or was that March high, and then a 5th wave that just is uncountable in up to the November 2013 high, because it was so energetic, and this is a logarithmic chart, right? So after 5 waves from left to right, we must have an equivalent 3 waves decline to the market bottom. And what you describe is what we discussed. You showed me this chart in Pangan when we 3 were there, and it was immediately clear to me, sorry for my neighbor, it was immediately clear to me that yes, there is accumulation going on, and this makes sense proportion-wise, that Bitcoin should now advance, not to a new high, but in a massive bear trap. Let me rephrase that, in a massive bull trap, in a bear market rally. According to Tyler's hyperwave, this bear market rally could take us in a phase 6, either to 6,000, and Tyler's saying that's going to be tough, and I believe him. But if the irrationality becomes, if it starts fizzing and it becomes too exuberant, we might even see a new all-time high based on a bear market rally. That's not out of the question. So yeah, Will, I agree with you. There's not much reason to be bearish right now. All the indications are that there's a move to the upside. The question is just how far, and I don't put a limit on it. I think that 25,000 is possible if the market goes full retard and stupid enough. And you're just to affirm your work is technical analysis.
Hey, Willy, anything to add on to Venzen? Other than that, I have a question I can throw at you.
Okay, I'd just say that I'm not so extreme with that price movement, that I do think most probable price trajectory is to bounce off the 4,300, if not even earlier. I'm still thinking that we need to retest the bottom zone around the lower mid 3,000s for some time. But yeah.
Right, so that was going to be my question to you, because if I throw screen share back on and you're starting to compare the current market more to the 2011 bear market, the 2011 bear market lasted into 2013. That was a 2+ year accumulation closer to the lows. than to the highs. So does this mean if you're now leaning towards the low in price being met, does that mean you're now extending the accumulation zone? So it's not like we're going to go up any sooner. In fact, if you compare 2011 bear market to the 2014 bear market, we bottomed out earlier in the time cycle, but it took us longer, like relatively speaking, to break the new highs. So does this mean we may be accumulating into the halving? Your thoughts on that?
Yeah, I guess it's just a matter of definition. You know, that 2 years, you could also say there was a significant rise. We're looking on a log chart, but if you look at share numbers, it went from $10 up to maybe $50 over those 2 years. It's like a 5x. So I would have classified that as, yes, there's accumulation. There's usually an accumulation going on a bull run. I'd say that that's already the start of the bull run. And what happened was we had a very compressed accumulation in 2011, that little double bottom dip. If you look at that on chain, you'll see that the volume of coins moving between hodlers went through the roof. Went absolutely through the roof. You can change this to another. You could maybe go to the momentum chart again, which is the share Bitcoins moving between investors, and we can see this one probably doesn't show as clearly because I'm trying to filter it out, violent movements. But if you were to look at the brown spikes underneath it, it went absolutely through the roof. A little bit to the left. Yep. Oh, look where the dip is, the double bottom of the 20. Yeah, you can see those brown spikes going way off on the trajectory. You can see on the orange line, it's on the left axis. We're looking at with on-chain daily volume. You can see how high that goes, and so ridiculously high, ridiculously. And a lot of my filters there are trying to filter out outliers, but that was a sustained one. Maybe go to NVT as well. I think let's go to the NVT chart. It might be easier to see it on it.
The ratio or the signal?
The ratio. The third from the top.
Or is that? Yeah.
Yeah. So you see there, that right. One puts it in perspective. See that dip, the massive dip in NVT ratio? That is unseen accumulation ever.
So there's a couple.
So let me just finish on that one. Because the amount of accumulation was so extreme on chain, that really shortened the accumulation phase. In my mind, if I was to say that was the accumulation phase, and we had a very tight accumulation phase, and what you were marking this sort of 2 years or 1 year extra is more bull, and that would mean that what we've seen down in the 3,000, if it's correct, is we're having it's not that extreme, but we're having decent accumulation. The reason why MVT looks so high right now goes to my kind of somewhat conspiracist thinking that maybe the volume's being gained, because I've got another estimate of volume that's based on hodling that is showing that it's actually sufficient right now to be the end of the bear and already in the accumulation.
All right, I will. That was great. That was great information. The only thing I will just remind people of, 2012 was probably the most manipulated price period in Bitcoin history, more so than today. And that's because one of the reasons why the 2012 had such a stable price, relatively speaking. Yes, it probably moved about 4 or 5x from $2 to $5. Is because of Bitcoin Savings and Trust and Trayvon Shavers out of Texas, where you are right now, Willy, and because he was basically the Federal Reserve of Bitcoin, giving out Bitcoin loans and then controlling the price of Bitcoin, because he had approximately 100,000 Bitcoin he was actively trading with to maintain price stability of Bitcoin in order to get paid back on Bitcoin-denominated loans. So that could have contributed to the somewhat stability of Bitcoin during the 2012 period. into 2013 when it kind of all got away from him.
I 100% agree with that. I'm gonna smash you over a chart that is unpublished. I don't know if you can pull it up. I'm gonna send it to you via private message. See if
I'll
you
pull it
can
up.
share that.
Do it.
Share that. This is just to
Yeah, I got
back
it.
up with data what you're saying.
A little small, but we can zoom in on that. There you go. So what are we looking at here? Oh, wait, we're not looking
I'm
at
not
anything.
seeing it on the. I'm not seeing it
No,
on
no,
the.
no, no, no. Give me a second here. That was my bad. There you go.
Okay, so what you're seeing is the upper line. Well, outside of the price, the upper line, the more reddish line.
Right, that's the price. What's the red line?
This is what I call the speculators ratio. That's a ratio of what volume is being played on the exchanges versus the volume moving on chain. So the amount of, think about this as if I'm a hodler or a trader, I will send my coins into the exchanges at certain times. So the ratio shows you how much short-term price speculation is happening. The amount of money moving to and from the exchanges versus the amount of money traded on the exchange is the orangish line. Now, the line underneath it is the volatility of price. Now, when do you trade more on exchange than normal? When the volatility is high. And you can see that the two track each other mostly, except in the 2012 range when the whole on exchange manipulation games were being played, and the second half of 2017. You see that ramp up? That's screaming to me a new animal has arrived. That animal is playing with the price of Bitcoin like a little mouse. And my estimates is there's about probably $300 million of ammo sitting in on exchanges, pushing the price around. Most likely, well, I'm almost definitely sure this money is on BitMEX. It's around 90% plus of the volume is on BitMEX, pushing the price around. And so we don't know who that person is, whether it's multiple hedge funds, but this is the rise of the quant-based hedge funds playing their games, their strategic roboticized games. Early in the 2012 was it Bitcoin savings loans, and he needed to keep the price at certain levels so he wouldn't get defaults on his loans. So he had enough Bitcoins to just put price floors, and you see that all over the chart with those early deviations. And so interesting to me is where you see the deviation in 2017.
Yeah, it started right here. I find it fascinating that the entire 2014 bear market was so orderly with these between these two ratios, and now it's been like, well, it's getting a little closer, but still, like
there was some interesting things in that zone, right? And where do you think it started in that 2015? It that first blip that got us out of the bear market was a Chinese MLM scam.
MMM, yeah, the triple M.
Right.
It actually was more Russian and Nigeria, but yeah, China was kind of involved too.
And then that was the era of Chinese mucking around with price. Yeah. And this line's filtering out a lot of the China. It doesn't include the Chinese exchanges. So
man, you know what? We may be dealing with this until another Mt. Gox hammer drops, and I can see like another Mt. Gox, but like happening across all of the exchanges, because again, if you hold your Bitcoin, you have nothing to worry about. And I think sooner or later, something is going to hit the fan here, because you're right. They need to reset.
There's they need to, or it could be a little bit like what I guess happens in Forex markets, is that they don't reset and we have a controlled market. And that's, when I think about it, that's probably more likely. I don't think the markets of this world is very organic. I think the largest quant funds, hedge funds play this game. And so that's what worries me, is that Bitcoin, as it grows from its current 60 billion to the multi-trillion it needs to be a macro asset, we're then back in the standard game of being a controlled market. But yeah, just also I want to touch on that deviation where it starts to come back down, starts to reset, and then second half of 2017. And you remember in the first half of 2017, it was all about the Winklevoss ETF, and then we had what I surmise is the smart independent money reading in the Wall Street Journal. Oh, there's Bitcoin, and I thought it was drug money. I thought it was money laundering, and now they're doing an ETF. We had a whole bunch of people that are used to markets start to review Bitcoin as being a financial instrument without being a piece of drug money. And I find it interesting that in the tail end of 2017, you start to see this sort of manipulation go on with very sophisticated traders using very sophisticated means to manipulate that price. And what I'm also seeing is the on-chain volume starting to deviate at the same time. And that was the surprising thing for me, that they would go as far as to manipulate on-chain. I'm not 100% sure, maybe that's a bit conspiracist, but I'm seeing something really weird in the data from 2017, second half onwards.
All right, cool. Hey man, thanks for all that info. I have to keep this video under 2 hours, only because I don't have time to deal with all the people that are saying where the first missing 20 minutes, because YouTube only renders in 2 hour increments. So to save myself, answering, the same question 100 times, I have to keep this to under 2 hours. And I do want to get to the S&P 500 a little bit and maybe a couple of stocks. Tyler, you've been quiet the whole time. Anything you want to mention on all of, I'm having a problem processing all the info Willy said. It could be 10 days of partying in Hong Kong plus a 14-hour flight I just came off of. So that could be those could be contributing. Also, I haven't eaten in about 35 plus hours. But anything you want to add, Tyler? And then anything else on Bitcoin, Willy? But feel free to stick around.
I'm gonna have to step out of here. I've got to check out of this hotel and get on my flights. But so that's very timely. But great jumping on and seeing you guys there, and I'll catch you on the next pass.
Great to see you, Willy. Great stuff. Really, really fascinating stuff. I loved it.
Yeah, thank you, Willy.
Okay. All right, catch you later.
Thanks, Will.
All right, Tyler, quick thoughts, and then we go to traditional markets.
Yeah, I like everything that Willy and Venzen have said here. And I'm very conflicted. I'm conflicted because I have asserted since I first got into this space that I think the infrastructure is so corrupt that I would never buy Bitcoin on any exchange, and that's why I turned to GBTC. I haven't seen anything to dissuade me from that. One of the reasons I'm going to Malta is I want to hear the best in the world explain to dummies like me on a technical basis why I'm wrong about every aspect of the infrastructure of cryptocurrency. And I'm hoping to come away from that conference with more confidence in what is going on. But what I just saw from Willy has got me thinking that I've been right all along, that there is just constant manipulation. You can't believe any of the miners. You can't believe any of the hash rates. You can't believe any of the volume. You can't believe any of the transactions. You can't, you are going to be taken to the cleaners by huge moneyed individuals that have figured out a way to completely corrupt this system. And because of that, until we see a huge drop in the number of crypto projects, I can't buy into any of the bullish narratives of the price being able to go up. And am sticking with my views that we've got a long way to go to the downside. I'm not very interested in the intermediate term little pops because I know those can be manipulated. I don't believe the long-term trends of supply and demand can be manipulated. They're simply too big and too powerful. And once we finally get to where we're going to go, because we've washed out all of this nonsense, then we'll be ready to see some very big numbers in Bitcoin, not in the other cryptos.
Tone, can I jump in a little bit there? Thank you, Tyler. Tyler, not that I can educate you, other than that I can speak, and I'm sure the Tone will sort of echo these same sentiments, is that when we look at the price chart, it's one thing. This is a speculative, highly emotional. I watched the show by Elliott Wave International, and they were saying this is by far the most emotion they've ever seen in a chart. And I guess that's exemplified by the price movements we see, right? Because as a Forex trader and commodities trader back in 2013, when Bitcoin came into focus to me, I was like, this is what I want to trade because this is incredible movement. You know, when there is movement, you want to be part of that. You can fire 50 shots and the one that sticks is going to get you into a tremendous rally. This is the price speculative aspect. And here I have to disagree. Well, I don't want to disagree with Willy Woo because Will is making very compelling evidence that there are strange forces at work and that the balance between the exchange price and what's happening on chain, that sometimes it disconnects. And Tone explained that very well for the 2011-2012 period. This is strange, but in a sense, it is still completely organic because it follows the Elliott wave pattern completely. Now, I'm not talking about using Elliott wave predictively. I'm talking about using Elliott wave in hindsight, where you measure the ratio between bottom and top, and the correction of it, and then the next top and bottom. And the ratios are picture perfect. Even though it's crazy, even though it doesn't make sense, even though the distances are unprecedented in the history of markets, we're looking at perfect Elliott wave extensions to the upside and retracements to the downside. And when I say extension, I mean by fib number, not necessarily 1.618, but you know, 1, 3, 5, 8, 13, 21, 40, you know, these 54, these numbers are playing out in the chart like perfect, each top, each retracement, and almost 90% on the major corrections. So that is a sign that we are looking at an organic market, that it is almost too organic. And this makes sense because Elliott Wave talks about emotion and collective psychology, right? And if everyone is seeking a new way forward, everyone is seeking a sound money, a way that is unconfiscatable, a manner in which the governance is correct, then Bitcoin is playing out perfectly. Willy's analysis seems to show that there is other forces at work, but I want to come back to the point of governance, and this is where Tone will back me up. Besides the speculation aspect, the fundamentals of Bitcoin are so solid that one can say with 99.9% confidence that Bitcoin is not on a race to zero in the long term, but on a race to 100,000 and 1 million and 10 million. Purely by its fundamental strength and the strength of the governance model that takes Bitcoin development forward. And that's why I would say to somebody who who bought at 15,000 or bought at 19,600, whatever that top was, that even that wasn't a bad decision. Even buying the top in Bitcoin in the long run is not going to make you a bag holder. Yet, Tyler, I know for sure, because you've seen it, the same thing I've seen in moving averages. We know when a bear market is over and we know when a bull market has begun. And this is not the beginning of a bull market in Bitcoin. It is still a bear market, and it's whatever stupidity price does to the upside. Willy's going to tell us about it. Tone is going to see nines, and you and me are going to see it in the moving averages, right? That's what I wanted to say. Just to give you that confidence that not to give you that confidence. I don't mean to educate you. I mean to say that Bitcoin is on an upward trajectory, not downward in the long run. And it coexist with any other money, stupid money, fiat money, and with other cryptocurrencies that people believe in that actually have no fundamental value. They can coexist.
Yeah, and
I'll mute myself there because it's noisy where I am.
Yeah, and Venzen, and on that note, as you left off, I was just about to say it, like, if Bitcoin is so manipulated as you guys say it is, I have a slightly different view on it all. What does that mean for all the other cryptos? Because unlike Bitcoin, all the other cryptos are also being manipulated from the code perspective because they're not decentralized. But on the flip side, the financial institutions don't give a shit about all of them. Maybe Ethereum, because they've somehow been fooled into thinking the code base is manipulated, right? So one of the reasons why Wall Street is capable, or one of the reasons why Wall Street is entertaining the idea of manipulating the price of Bitcoin is because they probably know that we can manipulate the price of Bitcoin because there isn't a greater level of manipulation on the code base that will screw us. So that means this is another reason. This is what gives me even more confidence. The fact that Wall Street or these billionaires, there's always a bigger whale. The fact that they have the confidence to manipulate the price of Bitcoin means that they have the confidence that the underlying code isn't going to be manipulated from under them. And that is enormously bullish for Bitcoin long term.
Absolutely. You said that really well. If you can just cut from the beginning of that statement to the end and put that up by itself, that's a magnanimous statement, because it shows you how certain people can see this thing is a rising market, a permanent feature of the world economy for sure. Yeah.
Tyler?
I agree completely. That's very well said. And one of the reasons I wrote the Medium article, The Long and Winding Road to $10 million Bitcoin, was exactly what Venzen said and what you said. That's what attracted me to this area. I don't think it's inevitable, though, because I think a lot of other things can get in the way, and we're seeing one of them get in the way right now, which is all this other nonsense. And that's why we're in a bear market. We're not in a bear market for Bitcoin because there's anything wrong with Bitcoin. We're in a bear market for all the cryptos. And that means that a lot of people that don't have the understanding of the difference between the two are putting Bitcoin in that same area. But so great points by everybody. And Venzen, don't ever worry about schooling me, because that's what I'm all about. I love learning from people that know things more than I do about various subjects. So thank you very much.
All right, on that note, let's take a look at the S&P 500. Now, I covered it in my last video, and it's the weekend. There's really not much else to say about it other than, I mean, I could not be, like I said in my last video, something you almost never hear me say. I am bullish holding S&P into the weekend, and the weekly chart is on a 9. Like, that is something I've almost never said. And I think one of the reasons is, which I didn't even know, but Tyler, like in our 5 minutes before we went live, Tyler said that somebody had posted a whole slew of significant stocks that all actually turned on a 9, because many of the stocks that started this rally, they kicked off, because the difference between this being a red 6 and this being a weekly price flip was so freaking small, because the close of the S&P the week of December 10th was 25.99.95, so basically 26 flat. And the closing here, I'm sorry, not even 20, sorry, 25.99.95, right? And this was 25.96. So the difference was just a measly 4 points on the S&P. So that means the majority of the big name stocks would have kicked off their sequential a week earlier. And that makes complete sense as to why the S&P had this monster turn on candle number 8. Now, I've been too busy and I wasn't looking at stocks for the last 2 or 3 weeks with all my travel. So I had no idea so many stocks of critical performance hit their 9s 1 week earlier, because we're dealing with weekly charts. This makes so much more sense. So when I say that, wow, this is for the first time ever, I would hold the S&P on a weekly 9 into the weekend, that's because if I start looking through the significant stocks that caused this weird action, I would be bullish as hell those individual stocks. So we don't have time to go through those stocks, but maybe something you want to say here, Tyler. But actually, I'm not going to look at this, and I'm sure you saw what I said about Boeing the other day on its daily and weekly chart. I don't want to revisit that part. And people have been asking me for Tesla, so maybe I can glance at Tesla real quick, or and then I will glance at the Nifty as a favor since I just came back from India. But let me look at Tesla, and then I'll get your thoughts on both Tesla and S&P. Unfortunately,
Tesla's your 5th one down.
I can't even find it.
Right
there. Found it. Oh, I didn't expect it to be bearish. So it's not actually bearish. Tesla remains in a multi-year consolidation, because Tesla is in this, they haven't really, the hype of Tesla remains bigger than anything Tesla has actually done. But they are always on the verge. They're always on the verge of doing something like some kind of a mass adoption. I think Tesla is still going to do great and big things. So I would be considering picking up Tesla off the moving average here, whatever moving average that is. Looks like it's the 200, because this 200-day moving average has been very, very good to Tesla. This is a 200-week moving average. I can hop over to the daily chart, and the daily chart is unfortunately in a very bearish posture. So I will take back everything I just said about Tesla from a weekly perspective. And I would not be picking up Tesla here. I would wait for it to price flip and get above some of these moving averages. So while from a weekly chart, it looks like it's like a higher low for the 3rd time, the daily chart on Tesla is scary. I would not be a bull of Tesla at the moment. Tyler, your thoughts?
Yeah, I've been playing Tesla long and short. I had bought it at 275 and just sold it 2 days ago at 293 before this last drop. And I am thinking of getting it here, except for what Tone just said. The daily looks horrible. Consensio is fully negative on the daily. I do expect this long-term moving average to hold, but it might be several weeks. As long as we can hold above the green dotted setup trend line, I will be bullish, but I think we're talking several weeks from now. I want to see it figure out where it wants to go.
Yeah, like for me, it looks like a nice rolling, but like I'm looking at the sequential here on a weekly scale, and it's just not that great. Though buying it on a 9 right here, right at the setup trend line would have been absolutely perfect. Selling it on the sequential 13 would have been perfect. And right here, it was a 9 that failed. I would stay away from Tesla at this moment in time. The Nifty, however, is looking beautiful. You just had a 2 go above the 1, approaching new all-time highs. So I am bullish the Nifty, and I would have been bullish the Nifty as of this 2 breaking the 1. Now, this also happened a couple of weeks ago, and then we had a million price flips in a row. This is actually kind of crazy. But right now, I am pretty bullish Nifty. So whatever India is doing seems to be doing well. Let me glance at the daily chart to make sure we're not on a 9 on a Friday. And guess what? We are. So
Yeah.
So that means if you were bullish Nifty, you should not be holding Nifty into the weekend, unlike the S&P. So I would be out of Nifty for the weekend. I would wait a couple of days, and if it can, I would like watch this 1 to 4 candle pullback. Now the fact that we broke setup trend line on a Nifty is very, very bullish. I have a lot of confidence that this 9 is a bullish advancing 9, and this is what I would do if I do start this TD sequential notification service. You would get, an alert with a screenshot that this 9 has occurred. But then for a premium subscription, you would get my commentary on what does this 9 mean to me. And what this 9 means to me is a 1 to 4 candle correction on a daily chart, potentially as low as the moving average, potentially as low as the old setup trend line for 1 to 4 candles as of Monday, but then accelerating to the upside into the countdown phase to 13 to the upside, which would be in line with, up to 5 more weeks of upside, up to 7 more weeks of upside, and challenging new all-time highs. So that would be the kind of commentary you would get from the premium service on what does that 9 mean to me. I think that's it, guys. I think we need to go. Everyone is commenting that Tone is drunk. No, Tone can't be drunk because Tone just got off a 13-hour flight from Hong Kong, and it's 2 o'clock in the afternoon. I will agree that I drink a larger amount than a normal human, but not at this hour.
And it shows you the power of observation of the troll box, right? I've been sitting here in absolute heat. I've drunk about like 5 bottles of beer during the whole day, and nobody observed that I'm the drunk on the show. They're pointing their finger at you, the guy that's like sober and tired. So how does that work, right?
Yeah, I'm still however, I'm still detoxing from Hong Kong. So that's great. All right, guys, we do need to end it here, unfortunately. And I will just finish up with understanding Bitcoin in Malta. Please come out and support. I am looking into the cost of live streaming this event. Live streaming costs are very expensive. So we do want to bring you a high quality stream. I know that people always complain about audio and video, and if you guys think it's so easy, you should try to do it. And yeah, please check it out. It's going to be great. I can't wait to be in Malta, meet all these smart people and learn from them how to set up Bitcoin nodes and Lightning and satellites and all the rest. Any final thoughts? Last statement. I'm going to end screen share. And oh, by the way, sorry, one more thing. Head on over to tonebase.com. If you want to support my work, please go to the affiliate section and sign up for TradingView, sign up for VPNs. If you're going to come to the cruise and hang out with, well, I think that one will be just me. Please use this link. And of course, if you're going to do some Amazon shopping, I really need to upgrade all my tech. I will be doing that this summer, and you will have a lot more links. All right, I'm going to end screen share. Venzen, final thoughts from you?
Tone, by the way, if you do that alert service with TV Sequential, I would definitely subscribe to it, because a lot of times calls that I make coincide with what your indicator is saying, right? So that'll be great. I encourage you to do that. I'd certainly subscribe and have those updates daily, rather than wait for a video or whatever. I just glance, like, what is your assessment, right? People can subscribe to my website. I said that there was only 3 days left. I've left it open because it's a bear market. There's very slow uptake. You go to trade.cryptocurrency.net, and the website will guide you through the process. And going forward, good luck with that Malta conference, man. That's probably the conference that I've most wanted to attend, and I will attend it next year because I can't this year. Yeah, Adam back, Giacomo, everyone that matters will be there. Tyler, are you going?
I am going, and Lee is going to be there. Lee is moderating. I'm really looking forward to it. I'm going to take a million notes, just sit there and listen. And so I'm really looking forward to that. Lee and I have another hyperwave workshop coming up a week from today. It's a 2-day affair, Saturday and Sunday, that people can go to our website, lucidinvestmentstrategies.com. It's only going to be about trading hyperwaves, not about hyperwave theory. We're going to show with a lot of current hyperwaves that are going on, along with Socrates, who has joined us as an analyst and is finding a lot of ways of trading hyperwaves that are current. So anybody that wants to join us, I think it's going to be terrific. And Tone, thank you very much. I can't wait to see you in Malta.
Oh yeah, no, that'd be great. And yeah, you can check out the webinars over on lucidinvestmentstrategies.com. And yeah, so I know I've watched the hyperwave one. Are you doing it again?
Yeah, but this one's a little different. We did one, of course, at Unconfiscatable, which was a basic, and then we talked more about current hyperwaves in the second one we did, which was about 3 weeks ago. Now we're doing a third one that's all just on trading, trading techniques using options and futures, as well as inverse funds against a lot of current hyperwaves. You need a strong understanding of hyperwaves, but you should be able to follow along with what we're going to do. So.
Yeah, I'm looking to do my very first webinar on introduction to options. I'm going to make it a 2-day webinar. And because I do consider myself an options, I guess, expert, foremost, I like of everything in my trading, all my analysis, if you combine everything that I've ever said on this podcast, I still think that what I do with options, which I'm not actually going to teach, unfortunately, because there's too many trade secrets involved, but it's my options knowledge that is above the rest. So I am considering teaching intro to options this summer, but I'm not 100% sure I want to do that, just because I know myself and I don't want to accidentally give away something that's basically gonna eventually I'm just gonna do again in the future. Some of the things that I created 10 years ago are still could be enormously profitable, but I am considering doing a full detailed introduction to options this summer. We will see how that goes on a webinar, and it's going to be expensive, guys. It'll probably be more than what Tyler is charging for hyperwave, because it's just not something it's not the knowledge I really want to give away, but there's always a price limit for everything. But yeah.
Great. Thank you very much. Good to see you, Venzen.
Good to see you, Tyler. Thank you, Tone. Look forward to the next one.
All right. Thank you, guys. Thank you for coming on, and we'll see everybody on the next one.